And as we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, I wish there was more exciting stuff to tell you, but as you see here, let me just get a better little mark than that. As you see here, over the last 2 weeks, we've essentially gone nowhere. It's just kind of been a flat line, up, down, but it looks like the market is waiting for something to happen, either exceptionally good news and it'll shoot up, or some bad news, it'll shoot down. But it seems to be in a kind of a hold, if I can make my opinion, because that's all it is my opinion. It seems to be in kind of a holding pattern for now. So nothing much happening. And then over the course of all this, obviously that means volatility is dropping. We love volatility as volatility-based traders, so this isn't great for us. If we look at the NASDAQ, of course, similar picture, pretty much nothing. And the IWM has finally looked like it's about to catch up, which was kind of the only one that's been down. Remember, all the other ones at all-time highs. This one is now very close to its all-time highs as well. And again, similar story, a little bit more wild, but essentially nowhere over the past few weeks. So, what are we going to trade? Well, a little tricky right now because it's earnings season. And if you've taken my courses before, you know that we don't like to trade over earnings. Those are called, those are what are called, uh, I'm drawing a blank, uh, binary, thank you, a binary kind of event, which means we don't know what's going to happen, right? Earnings, it could shoot way up, it could shoot way down, it could stay nowhere, but essentially it's a binary event, which means it's a one-off event. And because it's not the normal course of business, we don't like to trade through earnings because anything can happen around earnings. So all the stocks right now are kind of in earnings season, which leaves us with stocks that have already had earnings to kind of play with, if we're not going to go into the actual indices or ETFs which don't have earnings. So one of the stocks that has just had earnings is Bank of America. And you can see earnings was right here, and it looked like it took a bit of a dive, but it has since recovered in the last couple days. But essentially what I'm looking at as a trader is where do I think kind of the range is, right? Because remember, an iron condor is a range. You want it to stay below a certain number and above a certain number. And if I look at the highs, you see it's 49. And if I'm kind of going for the last few months, I'd say it's kind of in this range. So to me, the range is about 40. You'll see what we set as our guides, but it'd be nice to be down here at like 43, but we're not going to have that option. Kind of right here is kind of where the range has been, except for this part right here. So again, we have to make assumptions all the time. My assumption is it's going to stay somewhere in this neighborhood over the next 45-ish days. Now, while I'm here, a lot of people always say like, hey, Cal, you got these rules where it says like greater than 50% IV, we don't like to trade iron condors or verticals or sell things. So it's a good time for me to lay down kind of a guideline slash rule. So when I set my courses up, I set them as rules because I want people to learn the discipline involved with trading, right? So once you kind of get the rules and can stick to rules and you learn discipline, then you can start tweaking things to kind of fit your own personal trading style. But one of the important things here is the IV over 50 rule, which I label as a rule, is really in effect a guideline because there might be whole years at a time when no stock goes above 50 in IV rank. So, what does that mean at that point? Well, that means we have to basically adjust our rules, guidelines to fit the new reality. So, simple example. Let's say that all the stocks, if you look around, are in like the 0 to 10 or 0 to 20 IV rank. Well, then 30 might be your new high. You know, instead of the greater than 50, less than 50, you might have to go like, okay, 30 or above. If everything's near 0, then maybe 10 or 20 is your new high IV rank that you can sell. So again, rules are laid there to teach you the discipline. Once you learn how to trade, then you'll start to adjust the rules to fit the actual reality of the markets, this being one of them. If the whole market is at 0, then 10 might be the new high, and that's fine, we can sell that. Or in this case, because earnings is everywhere, volatilities aren't normal, and we can't use those as guidelines. So we have to go to like post earnings, what do we get to play with? And again, this is one of the few stocks post earnings. Obviously, volatility is pretty low, but it's still fine. You can sell these things if you want to, iron condors in this case, even in low IV, what they call, what looks like low IV environments, because really it's not that low. Things are kind of 0 to 10. This might be about one of the highs in the market. Anyways, little side rail there, but again, hopefully clarifying real trading as opposed to just like black and white rules that everybody lives by and that I preach. But again, the rules are preached to teach you the discipline. Once you have it all, then you can start tweaking things to the new realities. So I'm fine selling an iron condor in this environment, even though, like I said, it looks low. It's post earnings, which is the big one. I want to do something besides an ETF or an index, so I got to bounce on the market, and I'm pretty comfortable where like I feel like this is a decent range. And if I believe it's going to stay there, then the volatility rank isn't as important in this case as my other assumptions, which is the 45 days, staying in a range, etc. So, long story short, we're going to go over here to the trade page. We're going to trade here at 40 because that's close to 45 as we can get. Tomorrow will be 39. I've set this thing up already and I've kind of showed you on the chart what it looks like. I'm selling the 49 call as the high. Remember, that was kind of the high of the last few months. The 45 put, I'd like to go lower, but I can't because remember, I have to make the rules fit 66 cents or more on the trade. So if I go lower than 45, I can't reach that. So again, the market dictates what I'm able to do as well. Obviously, in the perfect world, you could do exactly what you want, but we can't always do that. We have to kind of adjust our assumptions to fit the market and then decide if we like that trade or not. I'm okay with this trade. So I'm selling the 49 call, selling the 45 put, then I'm buying the call and the put $2 away. Again, I'm looking for 66 cents or more. So this trade is totally valid for me, for my guidelines in quotes, and I'm happy to make this trade in BAC, which is Bank of America, and its post earnings tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero as far as knowing absolutely nothing about options all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being what is an option. You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you will get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.